Hi guys and welcome to the trading show. This week we are gonna talk about
markets, energy sector on the rise, our portfolio, mini S&P future flies, tip of the week, mid-reverting on Bitcoin futures, and the weekly rollovers.
And if you are interested in systematic trading, then subscribe to our channel. I am Francesco Placci, Head of R&D at Unger Academy. Let's start from the market overview to see together what happened during the week. Hi guys and welcome. Very positive week for the equity indices, showing returns between 4.5 and 5% for both American and European stock indices. In this chart we see the mini S&P, which is on historical highs, as well as the Nasdaq, but also the European exchanges are in uptrend. To report increases in the energy sector, in particular we see a return of 16.5% for natural gas, and all energy futures show decidedly positive returns. Instead we have mixed returns for metals. In particular I would like to point out the silver, on which a short squeeze should have been in progress, but which actually seems, at least for the moment, to have failed. Positive returns for the meat sector, soft commodities as well, with the only exception of orange juice, while cereals show mixed returns as well as currencies. In particular, we see the Euro FX, which is slightly going down from the highs. Finally, the Bitcoin future, which as we know has shown signs of very high volatility, seems to have returned to the attack of the highs marked recently, about 1 month ago. On the volatility front, we obviously see very high values for Bitcoin. We are almost at the highs. As for the stock indices, well, obviously with this rebound, it is possible to notice a slightly lower volatility compared to the prices recently marked. On a longer time frame, it is at low percentile levels, while on the other hand, as regards the monthly time frame, we are still at fairly high levels. Let's also take a look at implied volatility. We see here the volatility indexes on the SPX. As you can see, we are returning decisively to contango, which is the characteristic term structure of bull markets. Here on the right we see only the VIX index, and here too we notice a return towards the lowest values of recent months. After seeing some key statistics on financial markets, and given the fact that automated traders also use this data to build their trading strategies, as usual, we will now take a look at our portfolio of trading strategies to see how systems have reacted to current market conditions.
Hi guys, from Alessandro Danos, and welcome to this new appointment with the analysis of our portfolio. This week I want to talk about the S&P 500 future, which had a very good, very positive week. In fact, with two strategies, we had very big profits. Here with the first strategy, we can see that on Monday the strategy entered long on this low. The strategy is a reversal strategy, so it tries to enter when the market goes down, and then we can see it here close the position at the end of the day for a trade of almost over 90 points. And we can see it here that thanks to this trade the strategy is performing really well. We can see that on Monday the strategy took a trade of $4,500, of course, so over 90 points as said before. And so thanks to this beautiful trade we can go to see the equity curve. And we can see that the strategy is at its equity peaks. Of course, on March, during the pandemic, the strategy was struggling a little, but then recovered very well. We can see that the 2020 was a pretty good year. Of course, the strategy that is calculated on daily bars makes a few trades, of course, because signals on higher time frames produce less trade than on lower time frames. But despite this low number of trades, the strategy reached a very positive profit. Now we can move to the next strategy that is also on the S&P 500 futures, and also here it is developed on daily bars. And we can see that this strategy is called DVI, and so it takes signals from an indicator called, as said, DVI. This indicator we can say that is some kind of oscillator, so it looks for overbought and oversold areas to look for reversal entries. And we can see that in the Friday session the strategy took a stop loss, and then again on Friday entered again long and took a good profit. We can see from the annual period that this strategy was developed on 4 years ago, and every single year of the out of sample period was positive. Of course, 2020 was a pretty good year, 2019 not so good. And now 2021 started very well with this beautiful trade, closed on the Tuesday session. And we can see from the list of trade that this target was over 100 points, that on this market is a very high profit. We can see it here, 5,600. And so we are very happy to see this strategy continuing to follow up the good performances registered in the previous months.
Hello everyone, from Andrea Unger. Today we will have a look again to the Bitcoin future, and in this case we will try to see if it's possible to trade the Bitcoin also with mean reverting models. First of all, I want to remember you that in my opinion this kind of product is maybe extremely dangerous and mostly for non-capitalized trader or non-expert traders. In fact, I remember the size of the contract is equal to 5 Bitcoins, and the minimum movement or the tick value is equal to $25. So if you are not an experienced trader or you are not very well capitalized, you may face incredibly high losses trading this kind of products. As well, here I have created two main strategies. The first one goes mean reverting, so goes counter trend on the previous levels, on the previous sessions levels, while the second one goes mean reverting, so goes counter trend on the extremes levels on the highest high of the last 5 sessions, and goes long on the lowest low of the previous 5 sessions. And each strategy has been developed both intraday and multi-day, so we will have a look in general to medium-term mean reverting and short-term mean reverting, both intraday or multi-day. So the first case here, it's the intraday version with the yesterday sessions level, and it seems to lose money quite consistently. So just from this kind of model, it seems the market doesn't reply very well to this kind of approach. So I would just avoid this kind of approach, at least on this kind of time horizon. Here it was the multi-day version, and now let's have a look to the same trigger but with the intraday version. And also in this case the strategy loses money consistently, but not as consistently as in the previous case. And in fact here we can see some positive periods there has been done in the past, but moreover, more often the strategy would have lost money quite every time. And now let's go to the second trigger, before with the multi-day model. And this strategy seems to be extremely dramatic. In fact, in this case, with one contract, you would have lost more than the initial capital. And in this case, also the latest part is extremely bad. So I wouldn't trade at all this kind of strategy with this kind of approach, of course. And the last one is this one. So it's the highest high of the latest 5 days and the lowest low of the latest 5 days, but on intraday basis. And in this case, the strategy wouldn't have performed that well at the end of the period time considered, but I think the equity shape is not that well in general, so I would avoid in any case this kind of products. By the way, some weeks ago we have seen together the trend following model, and it was extremely performant, so this kind of situation doesn't surprise me a lot, just because when a certain product has a clear tendency for, so in this case the clear behavior was the breakout behavior, it's pretty normal that the mean reverting behavior doesn't perform that well. There might be some particular cases where different approaches work both well, but this is not the case, and in general I would suggest you not to trade the Bitcoin future using mean reverting techniques.
Rollover calendar. There aren't many expirations on the next week. The futures closest to expiration are Linox and Live Cattle. Anyway, the greatest liquidity is on the April contract, so we can already roll over these futures. Well guys, so if you want to learn how to build trading systems like Andrea Unger, the only 4-time trading world champion with real money, go ahead and click on the link below. You will be able to pick a date and a time for a 45-minute call totally free with one of our tutors. We will talk about your current situation, what you are doing in trading and what you would like to do instead. And we will try to understand together if we can help you achieve your trading goals. Finally, if you like this video, press like and then subscribe to our channel. Thank you for watching. See you next week with another episode of The Trading Show.